Hi, I am Jack Bender, a junior in Marquette's Applied Investment Management program, and today I will be pitching Scotts Miracle-Gro, the current price of $100.50, and a price target of $124.60, with an upside of 23.98%. Scotts Miracle-Gro Company trades on the New York Stock Exchange under the ticker SMG. They engage in the manufacturing and sale of products for lawn and garden care, indoor gardening, and hydroponic gardening. The company operates through the U.S. consumer segment, 65% of revenue, the Hawthorne segment, 29% of revenue, and the other segment, 6% of revenue. This other segment is mostly global sales of their U.S. consumer product. U.S. consumer focuses on the manufacture and sale of lawn and garden products. Hawthorne manufactures and distributes lighting, nutrients, and growing environments for indoor and hydroponic gardening. Scotts Miracle-Gro earns 91% of revenue in the United States, 2% in China, and the rest from various European and Asian countries. The company was founded in 1868 and is headquartered in Marysville, Ohio. Over the past few years, Scotts Miracle-Gro has seen impressive growth numbers up to and through the pandemic, posting a 12% 5-year EPS CAGR. This growth was primarily led by a gardening boom that occurred during the pandemic. People spending more time at home, concerns over health, and financial incentives to growing your own food led to a large influx of customers for SMG. The firm posted 30.91% and 19.2% revenue growth in 2020 and 2021. Along with this, SMG's stock rocketed to all-time highs, peaking at $247.84 per share in April of 2021. Since the stock has plummeted nearly 60% due to management downgrading earnings forecasts, with the expectation of a 15 to 25% sales decline in the Hawthorne segment in 2022. Their explanation for this weakened outlook is that an oversupply of cannabis is resulting in a slowdown in indoor and outdoor cultivation. Their press release in 2022 also mentioned that management expected an 8% decline in the U.S. consumer segment. However, they have since changed this forecast to essentially flat from a year ago, stating they expected a range of -2% to 2% growth overall in the segment. This resulted in a revision to their earnings forecast of $8 per share in 2022, significantly lower than past reports. Other factors that cause the stock decline in price are increasing interest rates and high inflation numbers. SMG has $670 million in floating rate debt, which matures in 2023. The company hedges this with interest rate swaps to mitigate the risk. Management predicts a $2.5 million increase in interest expense for every 100 basis points change in interest rates. The market has overreacted to this news, and SMG's current price is already reflecting the worst possible case scenario. Because of a trend of growing movement to hydroponic gardening, brand awareness, and continued investment in research and development and acquisitions, it is recommended that Scotts Miracle-Gro be added to the AIM Small Cap Fund with a price target of $124.60, representing a 22.26% upside. Hydroponic gardening is the growing of plants and crops without soil in controlled indoor environments. The pros for hydroponic farming include better water efficiency, higher crop yields, less required space, year-round growing, and fewer needed chemicals. The hydroponics market is projected to grow at an 11.5% CAGR through 2028 from an estimated 24 million to 48 million. This market is currently driven by indoor cannabis growth, which is seeing continued legalization across the United States. SMG is the leading manufacturer and distributor of lighting, nutrients, growing media, growing environments, and hardware products for indoor and hydroponic gardening. This competitive advantage will lead to SMG to quick recovery in fiscal year 2023. SMG has been operating since 1868 and has built a strong distributor and consumer base, with advertising spending annually at about 3 to 4% of net sales. Scotts has built a 38% market share. SMG owns well-known brands such as Scotts, Turf Builder, Miracle-Gro Soil, Tomcat, Roundup, GrowPro, and others. This strong brand awareness and leading market share allows SMG to capitalize on more of the new home gardening and fertilizer market than its competitors. Along with this, strategic partnerships with Lowe's, Home Depot, and the MLB will continue to lead new gardeners towards Scotts products and further increase market share. SMG has a rich history of research and development and is a leader in advancing new products which yield large opportunities for increased profitability. SMG has consistently spent 4 to 5% of net sales on R&D, and this has led to multiple new products and brands. Recently, in 2019, SMG launched a new product named Miracle-Gro Performance Organics. This product development shows a commitment from the company to improve ESG by removing pesticides that can have negative effects on the environment. Furthermore, SMG has made many acquisitions over its history. In 2018, they made their largest acquisition ever, acquiring Sunlight Supply for $450 million. There were hints of a potential acquisition coming in 2022. However, management has stated that they no longer expect to make any acquisitions this year. To reach an intrinsic value for Scotts Miracle-Gro, a 5-year DCF model was created using a terminal growth rate of 1.5% and a WACC of 7.61%. An intrinsic value of $123.08 was reached. A sensitivity analysis of the terminal growth rate of plus or minus 50 basis points and WACC of plus or minus 100 basis points ranged from $91.81 per share to $174.37 per share. Additionally, an EV to EBITDA multiple valuation was calculated using a weighted average peer multiple of 12.9 times, resulting in a relative value of $123.39. Finally, a price to earnings multiple valuation was calculated using a 2022 EPS forecast of $7.28 per share and a weighted average peer multiple of 17.7 times, resulting in a relative value of $128.83. By weighting these models 50, 25, 25, a price target of $124.60 was reached, representing a 22.26% upside. The firm pays a dividend which is currently yielding 2.6%. Changes in rainfall patterns, water shortages, seasonal patterns, rising temperature levels, and government legislation to mitigate climate change could have an adverse effect on SMG's future earnings and cash flows. Also, increasing raw material prices, specifically in fertilizer materials such as racine and urea, could have an adverse effect on the company's cost of goods sold and profitability margins. Furthermore, SMG has approximately $670 million in variable rate debt outstanding. Changes in interest rates could have an adverse effect on the company if not hedged against. Also, changes in credit rating could have material effect on SMG's ability to raise required capital. James Hagedorn is the chairman and CEO of Scotts Miracle-Gro. His father Horace launched the company Miracle-Gro in 1951, and James helped orchestrate the merger with Scotts in 1995, became CEO in 2001, and was named chairman of the board in 2003. Corey Miller is the CFO of Scotts Miracle-Gro. He was named CFO in 2021 after 20 years with the company. Hagedorn Partners, LP, is the large insider holder, holding 22.26% of shares outstanding.